What's going on, everyone? Welcome to Real Talk Real Estate. I'm David Greene. This is the David Greene Show Live. We're going to be talking about the housing market, just what is going on with it. When I watch the news, like many of you do, when I consume online content, like many of you do, there seems to be the people making content putting a cheery spin on real estate. You can still make money in real estate. You just got to change your strategy. You just got to have someone that knows how to do it. And if you take my course for $99.99, I can show you exactly how to do that. Meanwhile, those of us that actually own real estate are getting slaughtered. I work in real estate. I have a brokerage. I have a mortgage company. I have a property management company. I have a lot of houses. I have short-term rentals. I have long-term rentals. I have medium-term rentals. I have house hacks. I have flips. I'm exposed to a lot of real estate. And I will tell you straight from the horse's mouth, it's not a lot of optimism going on out there. It's people losing money in deals and not saying anything. The contractors that at one point were like ripping people off are now kind of begging for work. The inventory is growing in many markets and people are cutting prices and buyers are much pickier. And if this continues, we're going to get to a point where no matter how good the price is, people aren't going to buy it because they know there's a crash coming. I'm not an old man, but I'm old enough to know what it was like the last time we had a buyer's market. It was 2010. I heard many people during my time on the Bigger Pockets podcast and in that space talking specifically about, I wish I'd been around in 2010. I would have bought all the real estate. In my opinion, then, it's the same as today. No, you wouldn't, because you wouldn't have a job. You weren't working. You didn't have a W-2. You couldn't get qualified to buy real estate, and you didn't have enough money to do it. You probably wouldn't have bought anything. It's easy to romanticize. I would have done it way back when it was really hard. Well, in today's show, we are going to be talking about what is going on in the world of real estate, what I'm seeing, what you should be paying attention to. Now, on my podcast, I am currently looking for people to share what's really going on in their local market. So we're going to be talking about Austin, Texas. I'm trying to find somebody from the Miami area, some of these really hot markets that at one time were crushing it. They're now getting buried. And share this news with everybody else so that we can balance out some of the hype with some of the reality. It's not all doom and gloom, and it shouldn't be all cherries on top of sundaes. Got a couple of videos we're going to get into today. As always, please take a minute before we do. Subscribe to the channel and share it with other real estate investors or even wealth builders that you may know so that we can get the word out. When I'm going live, you'll get notified. And leave your comment below. I read those on my podcast, The David Greene Show. We have a whole section called the comment section where we get into it. So if you say something funny, clever, intelligent, even mean, people have made fun of me. They've said I don't have good hair. They've said I'm negative. What else have they said? Can't think of anything else off the top of my head, but sometimes people say mean stuff. I read those too. I'm not scared of it. So leave your comment below. Before we get into the first couple of videos, we've got some comments here. Encore Entertainment says, hi, David. Well, hello, Encore. Gordon Max says, what's up, my big-headed brother? See, there you go. I got a big head, apparently. Also, this doesn't need to be said, but I'll say it anyways just to make you laugh. I was recently in Austin, Texas at the REI Summit with my good buddy, best friend, Brandon Turner. Really good event that was put on. I'm trying to remember the name of the company that did it. It will probably come to me as I'm Fixated Events. And I thought it was a good time. However, probably had 90 people come up to me and say, you're way taller than I thought. So let me know in the comments, how tall do you think I am based on this camera angle that I have? And also let me know when you met me if you thought I had a big head. If I take your course for $99, will I become a thousandaire? That's funny. Gordon says, I'm in Miami, a licensed agent and investor. What's up? Just want to talk about what's going on in the market out there. Here in Houston area, I love your content. Justin B., let us know what's happening in the Houston market, and do you want to come on the show and talk about it? And Colby says, will wholesaling real estate be affected? Colby, I like that question so much that I'd like you to submit it on my website for my podcast. So head over to davidgreene24.com/ask and submit your question so I can put it on Seeing Green. I love that question, actually. And the answer is yes, it will be severely affected, maybe more than anything else. And if you submit that for the show, I'll give you details of why. All right, let's get into our first video here.
Waiting on has finally come. National Concealed Carry Reciprocity.
This does not look like the video. There we go.
So housing markets in the Southeast and the West are seeing more inventory and softer demand, leading to price reductions, whereas people in the Northeast continue to tell me that they don't have enough inventory on the market and they're driven by higher income growth and limited supply.
For the first time in more than a decade, the number of U.S. home sellers now dramatically exceeds the number of buyers. That's according to a new report from Redfin. The shift in buying power could cause prices to fall. For more on the latest trends in the housing market, let's bring in real estate agent Kirsten Jordan. Kirsten, thanks for joining us this afternoon. You know, you talk about where we were in the middle of the pandemic. It was a story about low inventory, low rates when it came to mortgages. We're in a lot different place now, aren't we?
It is so different right now, and it took us a minute to really adjust to these rates going up. And exactly what they're saying about the difference between what we're seeing in the South versus what we're seeing in the Northeast is that a lot of the insurance rates and in general, what we call unsustainable price increases that were going on in the South, we're seeing those come down. And I think that's going to keep happening for a little while.
Yeah, you had a huge swing of people who were clearing out of larger.
All right, so let's break down what went on. A lot of people were moving somewhere cheaper. They were escaping the big cities. That was the trend a couple years ago. So California was crushing it. The Bay Area was doing amazing because you had all these tech companies with tons of money that needed employees to work there. Tech companies moved into other big cities like Seattle, Austin, San Diego, parts of Los Angeles. These cities were crushing it. Then COVID came. A lot of the New York, New Jersey, old money moved into South Beach, Miami. That market was doing really, really good. I bought in there, did really good north of Miami and some of the other cities like Fort Lauderdale, Pompano Beach. Everything was rolling. Then when COVID hit, people wanted to get out of the big cities. So they moved. Where'd they go? They went to the South. And when we started to see the cost of living going up, people wanted to find even cheaper places to live. So the Southeast was kind of the belle of the ball. This is where most of people were moving, which led to increased prices, increased rents, and good opportunities to build wealth if you invested there.
Colder cities moving to the Sun Belt. Has that slowed down a bit now that you're seeing some of these prices fall? Is that an indication that that move has really occurred?
We're seeing a really big change in this back to work movement, which I know we've been talking about now for years. If you think about it, though, when you're going back to work, or if you're in the early parts of your career, the 30s, the 40s, potentially you need to be in person to further your career and get where you want to be. And a lot of those places are in the Northeast. And then obviously there's the elephant in the room, which is the cost of insurance. And as we're seeing in Florida, especially for those affordable homes, those $300,000 to $600,000 under $1 million homes, the actual percentage of the home value and that they're dedicating to insurance costs is unsustainable for so many people, especially those people that are on fixed income.
The number of transactions that have been canceled, that's also up too. Why do you think that is?
This is so interesting that we're seeing that, especially the highest place that we saw it was actually in Atlanta, Georgia, which has been a traditionally, right, for the last 5 years, a big investor area, but we're also seeing it down in places like Miami, Florida. I really believe that this is coming from these insurance costs, and it is really coming from also seeing uncertainty. This report was from April, so we kind of have to close our eyes and go back and try to remember what was going on also geopolitically and what we were seeing, especially with the stock market, which doesn't directly affect the housing market, but it can make people extra skittish when things are going up and down. So there's a lot of different factors that we're seeing that are affecting these cancellations.
And you really are seeing two different markets here. There are those you mentioned under $1 million, the more affordable price range, and then the higher end, certainly where you are in New York City. What are the differences between these two markets, and how have they changed over the last few years?
The lower end of the market is where those costs and the cost of money, especially with the higher rates, is really hurting buyers. This is not a story of supply and demand as much as it's a story of high demand and low affordability, even though supply continues to rise. These buyers were really hoping to see that they were going to get a break when there was more inventory and prices started to come down. But when they really crunched the numbers, especially with the new cost of insurance, any cost of renovation, it's just really difficult for so many of them to get into the market. And then what we're seeing on the high end is that a lot of very, very wealthy have said, hey, everything's fluctuating big time. If I'm going to put my money someplace that's stable, I might as well put it in a market where I know that there's going to be sustainable demand in the long term. And that's why we're still seeing some of these very large trades in places like New York City. And I do still believe that we're seeing those at the very, very high end there in Palm Beach and Miami. It's just obviously some of those numbers we're not going to see necessarily as high as they were before, but in some cases we are.
A couple of years ago, mortgage rates shot up. They've stayed at that level essentially since then. Where do you think mortgage rates need to be before you start to see a bigger, it begin to spur more housing purchases, really juice the market?
The place where we need to be is probably something with a 5 handle. I think everybody's hoping that once we get into the 5s, we're going to see a tremendous, push in demand or ability to purchase, because again, the demand is there. It's just the ability to actually buy something that's affordable. The reality right now, though, is as a real estate agent, I do encourage my buyers to get out there and understand the market right now. With these canceled contracts, the best moment to get in there and get a deal with a seller is right after they've lost another deal. So if
this is 1,000% true. I talk about this in many of my books, including my books for real estate agents. Those are published through Bigger Pockets Publishing. The idea here is sellers operate on an emotional frequency just like everybody else does. So they start off full of greed. They want the highest price they can get. It slowly moves towards fear as the house doesn't sell. That's when price drops can happen. You don't want to be writing offers on houses that just hit the market in most cases, because the sellers have the highest expectations because they're on the greed side of the spectrum. What you're looking for is this perfect little sweet spot when they were in escrow with someone else and they fell out. They are so discouraged. They are so debilitated that they will take a lower offer, especially if it comes with some certainty. That's actually how I bought the house I'm sitting in right now in Oklahoma. I was going to flip it. I wrote an offer. They went with somebody else's offer that was higher than mine. That person couldn't close. It ended up being a wholesaler. Did you guys know that wholesalers are buying houses off the MLS and then selling it for more than they paid on the MLS to you when you go to the wholesaler? That you could have got it cheaper if you would have actually got it off the MLS yourself. Yes, wholesalers are not always giving you great deals. They're oftentimes ripping you off. So in this case, the wholesaler couldn't find anyone to assign the contract to. So I came back to them and said, hey, I still want to buy it. And they said, great. And I said, well, now this is my price because you guys went with somebody else and it's been 10 days or whatever the case was. They didn't love it. But what I did was I made my earnest money non-refundable. I said, hey, here's my earnest money. It's a big number. Half of that you can keep no matter what I do. That's how confident I am that I'm going to close. And I got the price that I wanted. And so much of this house needed to be redone. I didn't think it was very likely that anything could show up in inspections that I wasn't already planning to replace. So I made up for my low price with certainty. Normally that doesn't work. When you're greedy, you don't want certainty. You want money. But when you've been disappointed and discouraged, you will definitely go for certainty over greed. And that's exactly what she's about to explain here. I just want to give it my little David Greene show stamp of approval. This is some good advice.
If you want to get in there right now, there's a really good chance that if you buy with the expectation that mortgage rates will probably remain pretty stable, you might be able to find some opportunity. And this could be that moment.
And real quickly, do you think there's enough new construction coming online?
There's definitely not enough new construction coming online. And for developers, they are getting annihilated. Remember, a lot of their borrowing rates are higher than what we see for these traditional mortgages for homeowners, for primary homeowners. So it's going to be really tough to find that new inventory. And in any place where there is new inventory that is ready to buy, that you can get at a discount, it's a time to jump on it, which is something we're seeing here in New York City.
Kirsten Jordan, thanks for joining us.
Thank you.
Hey,
There you go, folks. Kirsten Jordan with some pretty good advice. I've been on the news a couple times. It was always CNN. If you know someone that works at one of the cable news shows or you work there, please let me know. I'd like to go back on there and talk about real estate as well as some ideas that I have for what I think would turn the market around and get people buying houses again, because that's what's really behind all this doom and gloom. Is we have crushed demand for homes. We have crushed people's desire to even try. You can only push people so far and they're going to give up. If you guys are single and you're following kind of what's going on in the podcast world or the social media world, there's a lot of really bad dating advice out there. But what you find is there's a huge contingency of men that have just said, we're just not even going to try to date. We give up. Forget it. The deck is stacked against us. The women, in this case, the sellers, they have such high asking prices. They're so unreasonable. They're so uninterested in what I have to offer I'm not even going to try to date. And it becomes a problem. There's like literally clubs shutting down because men won't go to them anymore. And men are getting off of dating apps and not even trying anymore. In that world, you hear a lot of people that make their money off of men trying to find women to date. They're losing money. I bring that up because the same thing is happening in the housing market. Buyers have just said, F it. Like, why try? Why buy a house if you're going to hammer me with insurance this high? If you're going to keep rates on me this high? If it's going to cost this much money to fix something every time it breaks? If materials are going to be this outrageously high? If I have to pay all of my money towards taxes and expenses, and there's no hope in sight that I'm ever going to get a raise because wages haven't increased at all, even though expenses have gone up. Have you thought about that? Have you considered that if expenses stayed the same, but wages dropped 25%, we would all be having a cow? People would be freaking out and demanding change. We would be sounding the alarm. This is a massive recession. This is a massive recession. That's what happens when you talk live on YouTube and stare at a camera. You can't edit out those mistakes. And we would be demanding that we do something to fix the economy, to give us jobs to work so we can make more money. But we've had the opposite. Wages have stayed the same, but the cost of everything has gone up 25%. It's the same thing as getting a pay cut, but nobody freaks out. Nobody demands change. We just sit here like the frog in the pot of boiling water and we let it happen. Well, that has happened to the point where wages have stayed the same and expenses have gotten so high that the buyers are checking out of the buying market, just like many of the men have checked out of the dating market. A lot of people have just said, the rules are so unfair, I'm not going to play. That's something that's going to have to be changed if we want at any point to turn this housing market around, because foreclosures are coming. They're already starting to happen. They're going to be coming in much bigger numbers. I watched what this looked like in 2010. That's when I got into real estate. I'm telling you, the way that this works is like a couple houses fall, a couple go to foreclosure, a couple more people start putting their houses on the market. Inventory grows and grows and grows and grows. Buyers are like, damn, I could buy that house for a really good price, but why would I? They're going to come down more. More people put their houses on the market. Foreclosures keep going up a little bit more here. It's something crazy, but buyers go, you know what? I'm pulling out completely. You guys can have it. I don't want to deal with that at all. I'm pre-approved, but I'm not going to buy. I have job stability, but I'm not going to buy. I'm going to wait and wait for blood in the water. And then all the houses hit the market at the same time. And then nobody's writing offers. And then sellers start letting their houses go into foreclosure. And then other sellers say, well, I could make my payment, but why would I? Houses cost half as much as they used to. I'll let mine go too. And everybody lets their house go on the same time. And the market gets flooded with not only sellers that are putting their house on the MLS, but REO from banks that had to foreclose that go put that house on the market. Now, if you paid attention back then, you know that what saved it was investors. Investors, of which I was one, but I was not bringing it at big level, said, hey, prices have dropped to the point they cash flow. We're going to go buy them and put renters in them. That's where the phrase cash flow even came from. We didn't talk about it like that. Well, there weren't really podcasts to talk about. There were just investors that understood this. And what the investors did was they soaked up the excess inventory that was flooding the MLSs with all of these opportunities to buy. And when they started to buy and they started to suck out the inventory, all the buyers that were on the sidelines were like, oh, I guess that they're not coming down anymore. Buy. Poof, they all rushed in at the same time. Prices started to go up. We hit equilibrium, but we didn't build. So we had the opposite problem. We kept rates low. Supply was too low. Prices got too high. We're now entering into what looks like the same cycle that we came out of last time. Here's what's different. We now have private equity in the game. We now have Invitation Homes. We now have BlackRock. We now have massive, massive institutional funds that can go scoop up these houses that will not go to you, mom and pop investor listening to me. It will go to them. And we will probably call on them to bail us out of this new foreclosure crisis that looks like it's coming. That means houses that used to go to good old-fashioned red-blooded Americans that worked hard, saved their money, bought a property, held onto it to a long time, learned how to manage rentals, passed them on to their kids, got their kids in the real estate game, will be gone from the market forever, eaten up by the hungry, hungry hippos. This is why I think it is so important that we act now before that is what happens. let's get into the next video. We'll talk about it more a little bit. Before we do, let's see what people have been saying in the chat. Andrew says it would be interesting to see you break down random local markets. Gordon says the different market sectors are all responding differently, but even after reductions, sellers are still profiting. If they bought 3+ years ago, Miami is always desirable for those who can afford it. Justin B says, I'm adjusting my insurance deductible to 5% from 2%. Insurance has been going up at a ridiculous rate. Gordon says, I don't see a crash or correction here. If anything, values will just stay flat for the next year or until rates drop below 6%. And Colby says, I would never sell to buyers if the cash on cash is less than 10% or anything below 20% return on investment for a flipper. All right, next video.
But first, the U.S. housing market showing signs of weakness during what is normally a peak selling season. Prospective home buyers are holding off, they say, due to some uncertainty related to tariffs and the economy and stubbornly high mortgage rates, even though they are way down from the highs. Rates slightly declining this week, the average 30-year now at 6.76%. Joining me right now is the U.S. Federal Housing FHFA Director and the chairman of both Fannie Mae and Freddie Mac. Bill Pulte is with us this morning. Bill, great to see you.
Good to see you.
Thank you so much for being here.
Of course.
I'm so happy to talk about Fannie Mae and Freddie Mac with you. But you say under President Trump's leadership, Freddie Mac alone financed 224,000 mortgages in just the first quarter. Tell us more.
That's correct. But we have a lot of work to do after the last 4 years. We're going to have to reverse what Biden did. President Trump's the exact person to do it. I think he's going to do it. It's going to take a little bit of time because, frankly, there's so much devastation that's occurred in housing, Maria. You know, inflation just ravaged the housing market. People couldn't afford homes. People couldn't afford rent. And so thank God President Trump was elected. And we're focused every day at Fannie Mae and Freddie Mac on making sure that we can get mortgages and get the American dream back for all Americans.
So what did you do? You tried to clean out the place.
Well, we got rid of a bunch of different board members, and we basically are exerting the authority that the U.S. Federal Housing has and has always had. It's always been essentially the board chair, the board itself, the stockholders. And really what we're trying to do is run these things as businesses. What a novel idea, right? Instead of running it like a bureaucrat or an academic or a professor, President Trump hired a businessman, and we're running them like businesses. Maria, they're safer and sounder than ever before. We've got a
question for all of you. Let me know in the chat. This philosophy that he's describing here, do we want political leaders and the leaders of government agencies to run them like a business where you do things that make sense, you try to earn a profit, you try to be efficient, you put intelligent people in the best positions with a goal, like a team trying to win a game? And so the players all have a role and a way of measuring how good they're doing and a coach that makes them do better? Or do you think we should run them like nonprofits where we just have good motives, good intentions? We want to like hand money to people, but we don't really pay attention to how well it's being used, as long as it's being used for what it was supposed to be. We don't bring that like cutthroat business mentality into it, and we just have nice people. Let me know in the chat which you prefer and why.
great balance sheet. You know, our LTV is around 50% loan to value on our balance sheet. We have $4.4 trillion at Fannie Mae. So things are very good. They will be very stable. We're very careful, but at the same time, we're making sure that these are assets that are used for the benefit of the American people.
So how does it work? Because these are also publicly traded stocks. Explain to investors how the U.S. government is overseeing this, and yet they still trade publicly.
Yeah, so the companies basically went into essentially bankruptcy in 2008, as everybody knows, and they went into conservatorship. And so I served through President Trump as the regulator as well as the conservator. And so you have these two different hats. It's quite unique what Congress has created in this position. But my main focus, Maria, is on creating value and helping President Trump restore the American dream for everyone. President Trump can do it alone, but what we're trying to do at Fannie Mae and Freddie Mac is really add support, especially on the financing and mortgage side. And I feel very confident President Trump's going to turn around the housing market, but the last 4 years in this housing market have been devastating for Americans.
What did Biden do that was so devastating?
Well, the big thing is inflation. I mean, you look at inflation, you look at drywall, you look at lumber. You know, President Trump had inflation under control. But when you have inflation ravaging the country, you have a supply crisis in housing that you have, it's just like a perfect bad storm. Mm-hmm. And President Trump's going to rectify it, in my opinion.
Well, he's already reined it in. I mean, look where oil prices are, look at rates. But what is it going to take to get mortgage rates down?
Well, I think President Trump's on that path. You know, there's nobody who knows the interest rates better than him. There's nobody who knows how to do this better than him. He's gotten oil prices down, gotten grocery prices down, egg prices down. I think that will flow through to mortgage rates.
Here's a quote from a TD Cowen report this morning. We believe the policy environment since the inauguration has improved considerably for banks, which should clear the way for them to return more capital to shareholders and get more aggressive on M&A. The deregulatory program that President Trump has instituted has not even become the topic of conversation. Everybody's focused on tariffs. Tell us about deregulation and what happens to these guys, Freddie and Fannie.
Well, I think he's going to do great on tariffs, to be frank. But on the regulatory side, we've cut, I think I've done through President Trump, over 50 orders, executive orders at Fannie Mae and Freddie Mac, getting rid of these nonsense Biden programs. I mean, the bureaucracy that was there, they had never even seen an FHFA director at some of these companies, from what I've been told. I mean, that's crazy. I mean, these are trillions and trillions of dollars worth of assets. And so we're going in there and doing it. And I think that, frankly, you've yet to see what's best to come from President Trump.
And already the analyst at Cowen says change is occurring far faster than we have seen at any point in our 35 years of following financial policy.
Yes.
Now, as part of that policy, are you going to actually spin these out to the public, or you still want to have this conservative ship as government predominant?
We'll see. This will be up to President Trump ultimately, but President Trump is the best deal maker that the country and the world's ever seen. So if there's one person who could do it, it's him. Ultimately, it'll be up to him. What my job is to make sure that we have operational efficiency, that we keep our options open. Frankly, we had 16,000 people. Can you believe this? At the two companies, nobody was working in the offices. They were making popcorn and burgers and hot dogs for people that weren't even showing up every day. So I ordered them all back to work. And under President Trump's leadership, these are going to be great American icons once again.
Wow, you just came in and you started throwing the gauntlet down at Fannie and Freddie.
President Trump makes it easy. You know
Good for you.
He makes it easy.
You also launched a public tip line to combat mortgage fraud, encouraging people.
That's an example of someone who comes in and runs it like a business. And I'm not saying that's better. It's just a matter of opinion. But you are typically going to get better results. That's going to come at the cost of lower morale. You're going to have the workers at those companies that feel like their job is harder. You're going to have claims of unfairness, and there's a Gestapo running around making us do stuff. But if you're the taxpayer, do you want the agencies running efficiently with the littlest amount of your taxes that have to, or do you want an environment that's easier for the workers where they can kind of chill and have a good job as long as they're doing a good thing?
To report any fraudulent activities. What's the fraud going on there?
We have significant mortgage fraud in this country. It doesn't matter who you are. Nobody is above the law. If you are committing mortgage fraud, you are a risk to the system, and we are going to take the appropriate steps within our statutory capability.
Now, speaking of this, you actually referred Letitia James for criminal activity to the Department of Justice. Tell me about that.
Well, the letter speaks for itself. I don't want to comment on any specific case, but I will say that, people claiming that they live in certain states that they don't live in, people claiming other representations that are maybe not necessarily true. These are very big concerns to the mortgage market. It doesn't matter whether you're a welder, a plumber, a politician, an attorney. If you commit mortgage fraud, you are a risk to the system. And if we see it, we're going to have to say something. And I encourage everybody, if they see mortgage fraud, say something. We will take the appropriate action.
Well, do you think that the DOJ is going to take that recommendation? You referred her for criminal activity, Letitia James.
Well, I would refer you to the DOJ. And again, the letter speaks for itself. I would just say, as I said, that, occupancy fraud is a huge issue in the country where people are basically getting loans based on and certain down payments and certain interest rates based on saying that they live in one area and not another, as well as saying that they should qualify for loans that maybe they shouldn't have. So, just generally speaking, my thought is that mortgage fraud is rampant, and we are doing everything we can. We've made a number of criminal referrals, not just the one that you mentioned, and we will continue to prosecute, within the confines of our statutory capability.
Bill, this is a very important and informative interview. We appreciate it.
You got it.
Thank you so much. Bill Pulte joining us this morning.
All right. Interesting stuff there as well. Let's talk about this.
Introducing
mortgage fraud. What they're referring to, I believe, with Letitia James she's the, I'm going to get this wrong, like the mayor or the governor or some political office holder in, I think, New York, but a big city. And she was one of the people that was like leading the march against President Trump, trying to get him in jail for whatever they could. Turns out She bought a house not in the state or the city where she works. She bought it somewhere else. And they found out about it because she's required to live in the area where she governs or she is the mayor of. And she didn't. She claimed it was going to be her primary residence, which it would have. She's either unqualified to do the job if she lives there, or she's unqualified to buy it as a primary residence if she doesn't. And she bought it because she got a better rate and a lower down payment. You get much better terms when it's a primary residence than when it's an investment property or a second home. That is technically considered mortgage fraud. And because she's an elected official, I think she's in a lot more hot water, where they recommended this to the district attorney of that area to prosecute. And we'll see if that actually happens. Typically, politicians kind of have people look the other way when it comes to this stuff. But what he's referring to here is something you all want to avoid. You do not want to say, I live in this house, or I intend to live in this house, if you do not, in fact, intend to live in that house as your primary residence. That scares people who think if I buy in a house, I have to live in it for a year. They can't force you legally to stay in a place you don't want to go. If you buy a house and you were going to live in it and you bought it to live in it and you live in it, and then you get a new job and you got to move, or your neighbor is terrible, or the dogs are barking so loud that you can't go to sleep, or I can't give you guys legal advice here, but think of reasons why you wouldn't want to live there. It turns out that there's gang activity in the area that you weren't aware of when you bought it, or there's some problem that you just say, I can't stand it. You're not committing mortgage fraud if you move out of the property. If you didn't intend to do that when you bought it, that's what you want to avoid. Do not buy a house and say you're going to live in it and then don't live in it. Mortgage companies, I know this because I own one, TheOneBrokerage. We get notified when you post something on your social media saying house for rent that you claimed you told us you were going to buy to live in, and we report it to the lender and say this is a primary residence. Their underwriters will go look and be like, well, why does his Facebook say he's renting out a 3-2, which is exactly what this is, for $2,400 a month? Now, that doesn't mean it's illegal to do that. You could make an argument that, like, hey, I was curious how much demand there is for if I ever want to move out of it. But I want you to know they're paying attention to what you do. There's a lot of this that's gone on in the world of real estate investing where people haven't been told you can't just say you're going to live in it and then not live in it. And maybe they looked the other way before, but now with AI, with the tools that people have, it makes it very easy to figure out who's doing this and who's not. So don't do that. Talk to us at TheOneBrokerage. Let us help you with the loan. Let us go over your options. We do have some lower down payment options if it's not your primary residence, like a vacation home or a secondary home that we can look into for you. But you don't want to make that mistake of just assuming you can say whatever you want. And as we just saw in that video, these government agencies are now actively paying attention to see, are there people doing this? And I don't know of any other channels that talk about it because they don't own and work in real estate companies. I do. I'm every day talking to people that are trying to buy homes, trying to finance homes, trying to insure homes, trying to manage homes. So that's where this perspective comes from. And that's why I'm calling it out, which is a good point to point out, a good time to point out. If you guys have a short-term rental that you don't want to manage anymore, you'd like us to do it for you, look me up at davidgreen24.com and find the chat button and send me a message, or send me a message on Instagram or Facebook, whatever you prefer. Let me know about it. We're managing short-term rentals. We have a couple in the Smokies that we're managing right now, South Florida, some other markets, but we'd love to do yours for you. We also want to finance your real estate at TheOneBrokerage. Arizona Lifestyle said, will this step lead to lower interest rates? I didn't hear a straight answer to the question. Yep, they didn't really get into that. That is a factor that will have more to do with Jerome Powell, and he doesn't want to lower rates, and Trump wants him to, and so they're going at it. Christopher Lloyd, great realtor out of Virginia, says, we have had to have all of our clients sign a mortgage fraud form. If that sign on us with outlining exactly what you cannot do and allows us to terminate the representation immediately. Chris is going to be working with me as the broker in Virginia. So soon you guys will be hearing about my real estate brokerage, which if you're an agent, you can work for, and if you're a broker, you can work in. So keep an eye out for that. And go check out my episode where I interviewed Chris Lloyd here on the David Greene Show. Anthony Vasquez says, the GOAT King. Actually, I'm assuming that's what he says by these emojis, but I'm becoming fluent in emojinis, so I'm pretty confident. see what PBD has to say.
Obviously, place that I lived in for 24 years. Yesterday, Giancarlo asks Tom, so did you ever live in California? He says, my entire life growing up. And then you lived there as well.
Almost
for
18 years.
Or 18 years. So we love the state. Guy minnects me saying, what problem do we have with California? Don't you realize that this is the most incredible climate in the world with incredible data? I said, yes. But your policies suck, and they're pushing a lot of good people out, especially with this one. Let me read it to you. California approved 17% rate increase for State Farm, okay? 17% rate increase for State Farm. So this 17% rate increase for homeowners insurance effective June 1st, after the insurer requested a 22% hike, they said 22. California agreed to 17, citing a dire situation post-LA fires. Insurance Commissioner Ricardo Lara stated, we are in a statewide insurance crisis affecting millions of Californians, calling it a tough compromise. Consumer watchdogs Carmen Balber criticizes the decision, saying it adds insult to injury for homeowners facing delayed or lowball claims. State Farm financial distress was acknowledged by administrative judge who found the company is experiencing extraordinary financial stress coupled with surplus depletion that threatens ongoing business operations. Laura noted State Farm must justify its financial conditions and detail its recovery plan at a fall hearing. And this is for homeowners insurance. For renters, you ready? I'm going to let Tom give you guys what the renters insurance increased by. Go ahead, Tom.
And ready for this? It goes up 15% for renters and condos. However, 38% if it's not a condo. So condos got their own little lane, but they gave State Farm permission to raise it 38%.
So I'm renting a 3-bedroom house.
Yeah, 3
from
bedrooms,
somebody.
2 bath.
My renter's insurance, I was paying $2,000 a year. Now I'm paying $2,800 a year.
That is right. Jeez. You're up to $2,800. So that $800 is like a car payment. That's huge. And what's very interesting to me is I dug into this, and the administrative law judge, Carl Frederick Seligman, he said, well, this is because of weather events. Another devastating extreme weather event would nearly eliminate State Farm's surplus. Their surplus was $2.24 billion. Now, this is what an insurance surplus is. An insurance surplus is the money they have to set aside because someone's car is going to get stolen, someone's car is going to be in an accident, or you're going to have a fire in your kitchen, no one gets hurt, but you got to rebuild part of your house. That is what insurance is for. And so State Farm, when they sell X number of policies, they have to keep putting money in a savings account to cover all this stuff. Mm-hmm. They had $2.6 billion in it until Palisades burned down. And all the fires in California led by the Palisade. There was also other ones that were just horrifying. And now they're down to $620 million. So they put $1.6 billion whoosh out into people's hands. Now, those people deserve it because they paid for a policy with State Farm and they suffered a terrible loss. Mm-hmm. Well, now the judge says, hey, they're down to $620 million. And if there's another weather-related event, boy, that would eliminate their surplus. What's he blaming, Vinny? He's blaming weather.
Yeah.
Weather event.
Yeah.
He's not looking at the empty reservoirs, the fire department equipment that wasn't in working order, hydrants that weren't working, and also decisions that they made about not asking PG&E to clear brush and things. No one's looking at that. Oh, it's just the weather. So it basically is taking the bureaucrats, Richard Lara and them out of it and not putting it on people that says, wait a minute. Okay, so we got this situation, and you're right, with only $620 billion, these people, $1 million, these people could be in deep water, State Farm, but no one's looking at what was going on PBD before all the public policies and the mismanagement of things that led it to be such a devastating era. And when all the neglect was there, what happened when the wind and fire came to Palisades? Bawoosh. And the fire department was unarmed to do anything about it.
Here's a question, though, Tom. All that stuff we're talking about, that's not State Farm's problem, okay? State Farm is there to insure your homeowners. Okay? And now, here's the problem. You got to realize with
good market share, doing a good job, a lot of customers.
When you look at State Farm, he says right now, this is part of the story. The administrative judge, independent administrative judge, non-binding order, which found State Farm is in serious financial stress and recommended a $400 million cash infusion from its parent company. Their parent company is, I think, State Farm Automobile and Insurance Company, something like that. Mm-hmm. Then you have State Farm. Why do they need $400 million infusion? They're not making money. So guess what? They're saying 21%. They lowered to 17%. California homeowners can't afford that. 15% for renters in a condo, 38% for renters in a house, which in California, in many cases, you're renting a house from somebody else. You're paying at 38%. That's an increase on top of what it already is. But guess what the alternative is? Complain about it. State Farm leaves. State Farm leaves. The mortgage doesn't get approved. The mortgage doesn't get approved. The real estate industry goes into shambles. The real estate industry goes into shambles. And the tweet that Vinny just sent, Rob, if you can pull this one up. This is a tweet that Vinny just sent from Mario Nafal. This is what it takes to afford to buy a house today in America. Check this out.
How crazy is that?
For a 3-bedroom house, this is what you need to make to be able to afford a 3-bedroom house in America. Zoom in a little bit, Rob, if you could. If you could zoom in a little bit. Look at that. California, 210. There's only one state that's higher than that, and it's Massachusetts, 216.
Weird.
Okay,
And
you
New
got
York,
Washington.
does he watch it? Look at
New York's
York.
190. You got Washington, 175. Montana, 177. Utah, 169. Idaho, 163. And then you go lower. Jersey's 57. Connecticut's 44. Rhode Island's 41. Texas is half. Texas is half of California.
Gosh, why were people driving there?
Just by moving from California to Texas, you save 55%, 52%.
Amazing.
Alaska's 122, but go to Hawaii.
Look at Hawaii's the most.
And look where Florida's at, 125. Do you think there's a reason why people from New York are moving to Florida?
Yeah,
there's a reason for that. But remember, the fear here lies where? If you don't allow State Farm to make money in your state, they will say goodbye. And your real estate industry, the realtors are sitting there shivering because they saw data that came out last year, the fact that 7% of mortgages and sales weren't closing because the people that were buying the house were not qualifying for the homeowner's insurance. And they're like, man, I can't afford to pay this homeowner's insurance. I'm out. Adam, your thoughts on this?
Well, if you live in California, the number one thing that comes to mind to me is the math ain't mathing. How the hell can you afford?
Don't go to Vinny, but go keep.
Okay,
Go
okay.
Adam,
I'm sorry.
I'm not
going to make you do math.
Just,
Vinny.
I got you. Give me
How
your
old are
hand.
you,
I
Vinny?
got
Plus one.
48.
Keep going.
Okay.
Keep going.
But just the math ain't mathing. So, we talked about this, I don't know, maybe 6 months ago about everyone's so focused on the minimum wage. What's the minimum wage? What's the minimum wage? Forget about the minimum wage. What is the living wage? I don't know, Robert, if you can pull that up real quick, but I think the living wage, they're fighting for like $20 an hour in California, whatever they're talking about. But the living wage to be able to live in California, just live, is $28 per hour, which would math it out for me, what, $56,000 a year, the median income. So,
Hey, listen up. Are you?
Let me ask you guys a question when it comes to this living wage situation. It is
You're a real
true
estate
that you're
investor
going
or
to need to
considering
make
starting
a lot
investing in
more
real
money
estate?
to live
Here-
comfortably in a place like California. My question is more philosophical when it comes to this, and I'd like to know in the comments, what do you think? So as you're watching this, tell me. When I was a kid, we had one car for the family. I had 2 younger brothers, so there was 3 boys. Mom did not work. Dad worked a blue-collar job. He was a painter, painted houses with my grandfather, my mom's dad. He worked with him. Then he started his own business, which basically just meant he painted houses and had some people that worked for him. Did that most of my childhood. We did not have a lot of money. So it was normal for me to wear hand-me-downs from my older cousin, for my brothers to wear my old clothes. We did not get toys. We did not go out to eat ever. It was like a fancy occasion if we went out to eat. And even then it was like fast food. I didn't eat at my first restaurant until I was driving to my dad was driving us to my uncle's wedding in Washington. And we stopped at a Denny's. That was the first time I ever ate at a restaurant where you sit down and there's a menu. We had no gym memberships, no cell phones, no cable. Like, you played outside with you're playing catch or running around playing Cowboys and Indians, or you played inside with your toys that you got from other parents when their kids were done with those toys. They gave them to my mom. My mom cut out coupons. She was a bargain shopper. She came up with creative things for us to do as a kid. Like, by today's standards, we would call that poor. But it didn't feel poor when I was a kid. I had books to read. I had toys to play with. And when I got old enough to do anything, I was mowing lawns, cutting grass, babysitting, doing landscaping, watering stuff for people. I started refereeing basketball and football games when I got into junior high. I would house sit for people when they were going out of town. I would feed dogs. I would go with my grandpa to paint houses with him and get paid $5 an hour. I just worked, and it wasn't like hard labor like we talk about, like that's child abuse, right? I sanded the door frames. I moved the equipment around. I put out the drop cloths. I put out the masking tape. I took off the outlets in the house and put them somewhere to try to help him go faster. I don't think I was very good at it, but it was normal for me to always be doing some kind of work. That was the normal American experience when I was a kid. This is like how we lived. Today, that's not the case. You go out to eat more times than you eat at home. There's 2 cars in every house. They're newer cars. You don't wear hand-me-downs. You get new clothes. There's a gym membership. There's a cell phone membership. There's cable and internet. We have a lot of luxuries that we consider to be basic and expected. Okay. Every kid needs their own room, etc. Could part of the problem that we have be our own expectations of affordability? Could part of the problem of affordability be our own expectations? We don't want kids all sleeping in the same room. We don't want to wear hand-me-downs. We don't want to have one car where somebody stays home and the other person goes to work, because we call that abusive. Like, our expectations have risen to a certain point that requires a certain amount of money. And now 2 people have to work to do that. And now you have stressed out people that are both working, not paying attention to what their kids are doing nearly as much. Now we dump them off at school. Now school absorbs the responsibility for how to raise these kids. And we have complaining about that. And we turn to the government. We say, hey, you need to fix this problem. But it wasn't a problem before because the parents took the responsibility for that. I'm curious if anybody else has followed this line of reason or logic that I'm sharing. If you've ever thought to yourself that the reason we have an affordability problem has more to do with the fact that our expectations for basic life is way higher than what it was 30 years ago. And I'm not even talking about like the 40s or the 50s, right? I just mean like 30 years ago, during the 90s, during the 80s. Could this be why we have these issues that we keep complaining about? Because it's easier to complain to the government or external forces than it is to say, maybe we're wildly spoiled and we just got used to that. And every 16-year-old has an iPhone, which should be the pinnacle of phones. Like, you should have to be kind of wealthy to have a smartphone because they're expensive and it's the best phone you can get, but everybody has it. What are your thoughts on this? Michelle Bingham says, I live in Southern California and people are so spoiled. They can barely afford rent, but won't consider a place without an extra bedroom and a pool. Pedro says, do you speak a bit of Spanish? I think I saw you speaking Spanish at some point. I'm just curious. And Gordon said, yes, both David and Rob Abasolo both hablo español. Sí, hablo español, más o menos estoy aprendiendo. Como siempre, pero yo puedo hablar, leer y escribir más o menos, pero no entiendo bien porque no tengo muchas oportunidades para escuchar español en mi vida normal. Gracias por preguntando. That's a little bit of Spanish. And Gordon says, California sucks. And we'll wrap it up with Christopher Lloyd says, yes, and with salaries that are not moving up as quickly as our expectations for luxuries, debt is the go-to. And I think that contributes to our consumer debt issues, which also contributes, I'm going to assume here for Chris, to our feeling that it is unaffordable. We cannot live. Meanwhile, we're going out to eat every single time we go eat. Alex Aranda says, I agree. Keeping up with the Joneses has multiplied since the 70s, especially because of social media, paving the way for living a rich lifestyle. Yeah, we have massive FOMO today. I'm what most people would consider wealthy, and I've had this same shirt for probably 6 years. I bought it when I was visiting Brandon Turner in Maui. And I still wear it sometimes. And it was probably on sale at like some t-shirt store for $20. And I don't think there's anything wrong with it, because when you don't rely on clothes or cars or jewelry or makeup or watches or anything to get attention, it forces you to develop a personality and connect with people through values, which I think creates a better society. Kenneth says, I live in SoCal and I don't have a pool or extra bedrooms. Solid point. Andrew says everyone is accountable. Government and business have taken advantage of the average person, but at the same time, the average American is unwilling to make necessary sacrifices. That is a really solid point. You guys are giving some really good commentary here on just values in general. I like this. Lisa says, I don't think poor people publicly talk about what their living situation is. I think people who manipulate the value of the dollar want us to think that, so we blame ourselves. When I was poor people that I know. And Michelle says, I live in a fifth wheel. I love it. And I live so cheap. Well, she does have a horse in the picture here. Does your horse live with you in the fifth wheel, Michelle? Is this like Mr. Ed and you stay on one side and the horse stays on? Is that why it needs a fifth wheel? 4 for you and 1 for the horse. All right, let's wrap up here.
Here's what I'm seeing in terms of where people are moving. Now there's sort of like a regress of people moving out of Florida and even moving out of Texas, sort of the reversion to the mean. But here's the challenge that I think people, companies, states are going to have. 5 years ago, 10 years ago, remote work from home, work from anywhere really wasn't a thing, especially before COVID. Now it is. So you don't have to live in the place where you can make the most income. So a lot of people are basically looking at it saying, all right, it costs how much to live in Hawaii, in California, what have you? I could just go move to Tennessee or Texas, but get a job in California, get a job in New York, work remote, do the math. The number one thing that I would say to people is this: as much as you can, keep your flexibility high and your overhead low. If you can keep your overhead very low and stay flexible, especially these days, if you're able to work from anywhere, you could survive this massive increase in the cost of living in America today.
Yeah, I mean, this is scary for what's going on with California. I mean, when you're looking at wanting to live there, people have to answer that basic question. Would I rather take that money and paying taxes to California, thinking it's going to get better, or would I rather move to a Nevada, which is 70K less, that's a 33% savings, or Arizona, 33% savings, or Texas, 50% savings, and use that additional money to give to my kids for college, for future investment, for future business, for my own retirement? Is your decision you're making today allowing you to take care of the older version of you one day you'll be? You're one day going to be 70 years old. Is a 70-year-old version of you happy with the decisions you're making on the way you're managing your finances? Only you can answer that question. The rest of us can't. That comes to you. Adam, I want to continue to the next
I want to
story.
ask you a question.
Yeah.
The cost of living as a man.
Yeah.
Does it increase or decrease as you get older?
What do you think?
It gets higher.
Not even a question.
Not even a question. So I see all these people on minnect that ask me questions. Hey, Adam, I'm 28. I'm 32. I haven't started investing yet. I haven't really started saving it. I'm really trying to figure this thing out. And I asked them, do you think that life is going to get cheaper or more expensive as you hit 35, 40? And they go, that's a good question. Life's only going to get more expensive. So if you don't figure this out now in your 20s and 30s, by the time you're 40
that word
and 50,
you used, Tom? Can you bring back that word you used? I don't think he heard anything you said.
The caboose?
Caboose.
The caboose word, like Len went over here.
Well, as you guys know, in 2 weeks, Mondays at the 26th is Memorial Day. And, everybody, and I get it. It's time off, barbecues, we get to hang out, we get to drink. I mean, I'm not drinking, but, it is, that day isn't all about that. It's remembering the brave men and women who fought and fell to give us every single freedom, every single right that we have. And at Valuetainment, we don't take that freedom lightly. We know it's brought with blood and encouraged. So we got something on Memorial Day. We have a Memorial Day collection right here. We have the hats, Army, Navy, what else? Air Force. We got it all. So if you guys want to go to that section, and as the video is playing, we have.
All right. Let's see what we got in the comments here. Kenneth says, I did buy a house, though, in SoCal. Did a live-in house hack, burr. That's the way to do it. Now, here's the thing. Kenneth was willing to buy a house, live-in flip, or a house hack, where he rented out rooms to other people. If you lived 400 years ago, having a house with running water and electricity would have blown your mind. You'd have been the richest person in the world. And, of course, you'd have had a couple other people living in it with you because you'd want to share that wealth, and you'd make money from people that wanted to live with you. A house was a place you go to at the end of the day to recover. It wasn't a place you stayed at all day for your mental health. Kenneth looked at this like, I'm not entitled to an easy life. And so a live-in house hack made a lot of sense to him, and he built wealth because of it. If you look at it like you are entitled to have your own house, your own living space, and all the comforts, you're going to feel like everything's unaffordable. It really has a lot to do with our own expectations. And this is what triggers people. This is why they get angry when I talk this way. This is why I have a lot of like enemies in our industry, because I will point out sometimes the problem is David. Sometimes the problem is my expectations for what I deserve. When you're living in this place of, no, the government owes this to you, you scream, you yell, you burn things, you throw a fit, and you force them to give you the thing you want. But you don't have to be grateful for it because you're owed it. That's what you're supposed to get. But when you don't think the government owes you anything, when you think it's your responsibility to get what you get or don't get it, or go to work or not work, or work from home, or go somewhere where your employer wants you to work, then you don't ask for anything, and you typically are a happier person. Andrew says that's inaccurate. Many companies change their work from home policies. I worked for a company based in New York and was laid off once they updated their work from home policies. That's an example of like thinking that, well, if I'm assuming that what Andrew here is saying is that it wasn't fair to him because he couldn't work from home anymore. That's a wild idea that we ever got to work from home in the first place. If someone's giving you money, they make the rules of how you get it. And if you don't like it, you go make your own money. But we've lived in this world where other people pay our bills, pay our insurance, pay our medical, educate our kids, do stuff for us, that it seems unfair when we have to actually like sit in commute traffic. Like we feel like someone else should be providing the opportunity. And I wonder how much of that is leading to the anger and the lack of affordability. Like if you guys just want to know why insurance is so high, at its core, inflation went up, making materials expensive. Nobody wants to work blue collar jobs anymore. So you got to pay way more money to the people to fix the roof on your house or rebuild a house. Regulation is out of control. So when a house burns down, it has to be rebuilt. It costs way more money and takes way too long because of government regulation that shouldn't be there. And there's fraud. There can be like, if there's a hailstorm here in Oklahoma, I will be getting knocks on my door all day long from companies that say, hey, we can give you a whole brand new roof and we'll get your insurance to pay for it. We are experts in doing this. And they look for loopholes in the regulations that force the insurance companies to get you a new roof. Now, the person getting the roof thinks this is great. Those insurance companies have been ripping me off for years. This is what I deserve. Okay. But all the other people that are buying a house that have to get insurance, they're the ones paying for your roof. And when that happens en masse all over the place, it makes insurance go really high. That was happening in Florida for a long time. They found loopholes that forced insurance companies to replace entire roofs. Insurance companies can't go complain about this. They're the big evil corporation that everybody hates. Someone's going to listen to them. We're not going to tune into one of them on the news talking like they're a victim. We hate them. They're like the lawyers, right? But that's what was going on. And because it went on for so long and our politicians did not think like businessmen, they did not stop that, all of us are going to have to pay for more insurance. Well, rates are high, insurance is high, housing is high, and now we don't have a whole lot of jobs because people want to work from home. They don't want to go into the company. They're not as efficient. The companies are laying people off. That's what's probably contributing to our recession. Kenneth says, I moved to an apartment because it's closer to work. Michelle says, entitlement has gotten out of control in this country. It's bringing all of society down. All right. There you have it, folks. Are we heading for a housing collapse? Do you think that that's going on? What's your plan for if it happens, or do you think we can stop this before it gets there? I'll be sharing more information as we get more developments. Make sure you subscribe to the channel so you get notified when I go live. Also, go follow me on Instagram if you're not doing so. I'm David Greene 24, and check out davidgreene24.com where you can use the chat feature to connect with me, ask a question, say hi. Whatever it is that you got going on, I want to hear from you. So let me know. I hope you guys have a great day. I may be going live later tonight, so keep an eye out for that. See ya.